But as Warren Buffett said, if you don't know what you're doing, diversify, diversify, diversify. But if you do know what you're doing, concentrate, concentrate, concentrate. So for the average investor, diversification is the way to go. Bullion, royalty company, and equity.
So let's circle back to gold, which you are extremely bullish on at the moment. What is the best way to get exposure to gold as an investor right now? What would you recommend?
My recommendation for most investors is you own a bit of the gold ETF. You split your portfolio three ways. You own some of the gold ETF, you own royalty company like Franco-Nevada. To my mind, they're the safest, best way to have exposure to gold apart from the bullion itself. And then you look at the equities themselves, and then you can decide whether or not you want to be in the very large market cap company or the intermediate company. The reality is that in the gold business, where most of the money is made is the intermediate company, because they all end up being acquired.
All right. Well, what about physical gold? Do you advocate holding physical gold?
Yes, that's the no-brainer option, okay? But as Warren Buffett said, if you don't know what you're doing, diversify, diversify, diversify. But if you do know what you're doing, concentrate, concentrate, concentrate. So for the average investor, diversification is the way to go. Bullion, royalty company, and equity. For someone who really knows what they're doing, maybe they want to be in gold bullion with options and strike price and calls and, collars, and they can do a lot of things with it without having to be in the equity business. So it depends who you are.
Okay. It's always subjective. Very quickly, you did once say that you do see the Dow gold ratio hitting 1-to-1, as it happened, I believe, in 1930 and in the 1980s. How do you see that scenario happening again? How does that play out?
That's a very interesting scenario. The Dow today is like 35, 6,000. So we're nowhere near 1-to-1 ratio. And it's also instructive. In the 1930, the Dow lost 90% of its value. So gold only went up double.
Right.
In 1980, it's very different. The Dow actually lost early on 40% and then tack on 20%. So it went from 1,000 down to 600 back to 800, and gold went from 35 to 800. This time around, I think if the Dow loses 20, 30%, maybe, but there's so much money around, I'm having a hard time seeing the Dow losing more than that.
So you don't think we're going to hit Dow gold 1-to-1 ratio? You're taking that prediction off the table?
2-to-1?
2-to-1.
2-to-1?
Okay. So that's your new prediction, Dow gold 2-to-1 ratio?
Yeah, I think we could see 2-to-1. Yeah.
And that's more about how the Dow has soared and less about the value of gold.
Yeah, but at 2-to-1, with a 30% pullback, you're looking at 10,000.
Yeah.
That's doable.
2-to-1 gold to Dow ratio. And I'm going to ask you by when?
No, I think next 5 years.
Wow, next 5 years.
Yeah. And if you'd asked me that same question 2 years ago, I could not have given you an answer because I could have never predicted the pandemic.
Sure.
I could have never predicted the trillions of dollars that have been created out of nowhere and look at you straight in the face and say, oh yeah, we're going to see 10,000. You ask me why, I wouldn't have known. Now, when I look at inflation, when I look at the amount of money that's being put directly in the pockets of the consumer, and I look at what's happening with real estate prices, with inflation in general, with wages, yeah, it's like shades of the 1970s, and I can see it happening.
All right. So that brings us back to what it means for gold in this environment. If we have high inflation and still geopolitical risk, and potentially the Fed not being able to take as aggressive tightening action as it said it would, what do you see gold doing?
Oh, that's an easy question. And, because what I see today are shades, I call them shades of the 1970s. So we are seeing the same pressure today on inflation as we saw back in the 70s. And what's changed everything, Michelle, is really the pandemic. During the pandemic, we had all these frontline workers that we say, you saved our day, you did the incredible, task for the nation, and they were getting paid $9 an hour. And all of a sudden they're saying, if we're that good, why are we getting paid $9 an hour? Why aren't we getting paid what we are really fairly, should be valued at? And last year, 4.2 million Americans quit their job because they were not getting paid what, so the amount not today that the Amazon of this world and the Walmart have to pay is like $15, $16, $17, $19 an hour to attract anybody. And as you know, wages don't go back down. Okay, once they get up there, they don't go back down. So we're going to have wage inflation. We're going to have energy inflation. So again, in the 1970s, from 1976 to 1981, you had inflation going up every year. You had interest rates going up every year. You had the dollar going up every year. And guess what? You had gold going up every year. And that's what you're going to see for the next 4 years.
So gold going up.
Yep.
For the next 4 years, do you have a price outlook for gold then in this environment?
I think medium term, I could see easily 22 to 2,400. And I think it's probably going to go much higher than that in about 4 or 5 years' time when you see inflation keep going. People still, the narrative out there from most American banks is, this is transient. Don't worry, it's going to go back down. And if the dollar goes up, gold's got to go down. No, this is the old narrative. This is the narrative on transient inflation, on inflation's going to go back down. This is not what's going to happen.
So why hasn't gold really rallied so far? It has moved a little bit, but considering the fundamentals, as you quite rightly point out, are all in place, why are we not seeing this reflected in the price of gold at the moment?
Well, the pandemic essentially shut down the physical gold market. India and China in particular are huge physical buyer of the gold, and those two countries ended up shutting down during the pandemic. Now, the sales are coming back, but it made a big dent in the physical market. At the same time as the narrative in the US is, interest rate goes up, the dollar goes up, and gold's got to go down. And so you've seen the hedge fund slam gold every time there's a rumor that interest rates are going to go up. So that narrative has to change, and it is changing. I think a lot of, hedge funds are starting to work their numbers that it's going to be different. But until that narrative change, gold's going to have a bit of difficulty, going back up.